Good morning. It's UPB. It is October 10th, 2013. It's a Thursday. The market, after hitting all-time highs at the end of September, has been in a tailspin. It's the S&P 500 ETF. The spiders have been falling after breaching new all-time highs in the middle towards the end of September and falling until just yesterday. Early afternoon, we saw a nice spike off the lows. The selling seemed to let up. End of the session, though, we did have quite a nice sharp pullback, about 166.22 on the SPY before hitting about 165.50. It's going to be interesting to see going forward. Now, look at what we've seen. Now, I like to call, as we go back a little bit, if you've been following my videos, the November low. I like to call this low here the Abenomics low, because that's when Abe Shinzo, over there in Japan, started printing money like everybody else globally. It's that's how we solve problems these days, folks. But anyway, the point is, then we had a nice V bottom that November, which is almost, we're getting up on a year on that. Pretty crazy. At the time, the Nikkei was at about 8,000. It's at 14,000 now. That's what money printing does for you. It gooses stock prices. That's all we care about. When we're trading stocks, we don't care about anything else but what is going to happen to the price of a stock you're buying, the overall market, because these days everything seems to float higher and sink lower with the general market. So anyway, back in November we had a V bottom. Then this was oh my goodness, the last time the government kind of went into gridlock right at the start of 2013, the end of it. We had a beautiful V bottom. Again, another nice bottom there. And then in April, another V bottom. Then in June, a beautiful V bottom, and then most recently, back in August, we had a W bottom for the S&P 500 ETF, and my pointer is gone. But the point I'm trying to make is here, we're looking at a V bottom. That's what we want to see. To confirm this bottom here, is this the lows that we saw yesterday when we were selling off? And then if you look over the last year, we've only been this oversold 4 times. Back in October and November, and then ultimately this past summer before rallying up to new all-time highs. So to me, looks like we're starting to curl over, and we're going to make a push up to the 170 level in the next week or two. It's going to be interesting to see going forward. We have, obviously, the government still shut down. And I pointed out, if you look at the blog at optionmillionaires.com, it's another reason to be buying the dip, because every named sell-off since 2009 has been a great buying opportunity. Let's look at Netflix, because Netflix this morning, and you can see, let me just pull this line out of here. You can see and again, I can't zoom in by my normal methods, but you can see the decline it's had since hitting new, fresh, all-time highs. Back a year ago, precisely a year ago, we were talking about this at optionmillionaires.com at $53 a share, saying it was a great buy. Yeah. And it's moved nicely. This was back in October and November. See the spike up. This was the Carl Icahn spike when he announced his stake. Now we're starting to finally roll over. But what's interesting is today is we have an analyst coming out raising the target on the stock to over $400. So we're going to see a nice spike here. And you can actually see Netflix, after hitting a low of about 282 yesterday, starting to curl higher into the close of the session. And I think ultimately it's going to be over $300 today. So what we've seen, actually, if you look at some of the most heavily shorted stocks, Netflix, LinkedIn. LinkedIn has been getting destroyed after hitting fresh all-time highs. It's down a good $35 at its low, and it's coming back again like Netflix. Same thing. So what we're looking for here today, some trades that I'm looking for, are some of these heavily shorted stocks that have been destroyed the last couple days. So the market has fallen. We've seen really the heavily shorted names being the biggest, seeing the biggest decline. And so when the market starts to recover here, those are the ones that are going to see the sharpest increase in price per share. So let's look for LinkedIn really to cover this 240 level. You see, that's where we really fell from 2 days ago when the selling started in some of these high beta names, heavily shorted stocks. And that's where we look for LinkedIn. Let's go to Tesla, which is also seen some nasty selling since hitting the 185 level off its lows last week. Really collapsed to open the session yesterday, but recovered a lot of its losses. Was down to, what, at 3.4%. I'd look for this stock to at least come up to this 175 level by week's end, possibly back into the 180s. This might be a great call trade going into the end of the week. That's what I'm looking for, weeklies. We had that last week as well. Let's move into Apple. Apple is what, 490 pre-market here. You can see the stock, what it hit about 478 before it rallied late in the day, pulled back a little bit, but still looks very bullish here. This, you can almost say, is a bull flag, and it's going to head up over 490 today, looking for 500 by week's end. Let's go to another stock, Google. Google, if you look at this blue line. You see this blue line here? Let's go back even further. Back in time. See, that blue line goes all the way back into March, where it acted as resistance. The stock pulled back, hit support here, and then some people are saying beautiful head and shoulders pattern. You can almost say that. Doesn't look as well defined. I'd like to see the left shoulder and the right shoulder a little lower. So just imagine walking around with your shoulders all scrunched up. Yeah, that's not natural. You know, the left shoulder should be a little lower, and the right shoulder, the left top. So anyway, the point is, people are saying it's a topping pattern, which very well indeed it may be. But right here, again, we held. Look at how many times we've come through this 845 level over the last 9 months. We bounced off it significantly in June. Similar candle that we're seeing now. Actually, if you look, I can't zoom in. That method. Let's just zoom in that way. Okay. See that candle there? See that candle off the 845 low back in June? Look at the candle we had yesterday. Similar candle, okay? Now let's look at the result of that candle. We had that candle, and we have 1, 2 beautiful days. We were up in 2 days from that 845 level to almost $900. That's a $45 2-day gain. Are we going to get that this time? I don't know. But you can look. This is where resistance is going to be, that trend line resistance level. And we're going to see a sharp rally higher in Google. They have earnings next week, Thursday. We have earnings season really kicking off in earnest next week. Tomorrow, let's just look it up real quick because it might be a trade you can do here. JP Morgan Chase, also people calling for some sort of head and shoulders. You can draw a line across here, trend line as support at about 50. So let's see what happens with JP Morgan Chase. They have earnings tomorrow before the bell, as does Wells Fargo, which has been dripping lower. Oversold area here that seems to really not matter for the stock, but we'll see if earnings tomorrow does the trick. And next week we are chock full of earnings, namely Chipotle Mexican Grill, ISRG, and Google at the end of next week. It's going to be really fun. Earnings season kicking off. A lot of people talking about the market and how it's falling. Some people are saying, well, it's got nothing to do with the government being shut down and they're not raising the debt ceiling. We might default on our debt. Some people are saying it has to do with earnings. And if you look at Yum Brands yesterday, declining. Certainly not starting off. Alcoa actually, and Alcoa was up 1 or 2% early on. But it's not even the Dow Jones Industrial Average component anymore. Nobody really cares about that stock. Actually, an analyst downgraded it, said it was going to head to $5. So let's see. Next week's going to be really important for the market going forward. And then, of course, the following week, and we have Apple earnings coming up. It's going to be a lot of fun. So, hey, it's UPB here from OptionMillionaires.com. Futures are ripping higher. Let's see where we are now. Just off of our highs. Look at that. It's been a nice bounce. I'm looking for gains today. We'll see if they hold. I think that's going to be the key. That's going to be the key going forward. Can we hold our gains? We had a nice rally off the lows. We pulled back. We're up at about this level here, the 167 level. I would look at this level here, the 168 level, as a possible target short term. UPB here. Goodbye. Everyone have a great trading day.